title. Is the U.S. job market losing its mojo or just catching its breath? Hi, I'm your host, and you're listening to Pie Uncut, where numbers meet nuance. Today, we're looking at a question that's on a lot of people's minds right now. Is the U.S. job market getting worse? The latest government shutdown has thrown a wrench into the country's most watched labor reports. With the Bureau of Labor Statistics, or BLS, shuttered for more than 5 weeks, there's no official data for September or October. So the question isn't just how the job market is doing, it's how we even know how it's doing. Segment 1. Flying blind without the BLS. For decades, policymakers, economists, and journalists have relied on the BLS reports as the gold standard, the pulse of America's workforce. But when that data pipeline goes dark because of a budget stalemate in Washington, the entire economic conversation starts to feel like guesswork. As Federal Reserve Governor Lisa Cook put it recently, quote, "Due to the government shutdown, this is a challenging time to give an economic outlook speech. The longer the shutdown drags on," she warned, "the more disrupted our understanding of the economy becomes." Yet, Cook also made it clear the Fed isn't flying completely blind. They're leaning on private sector data, payroll processors like ADP, job sites like Glassdoor, and direct feedback from business contacts to piece together a picture of what's really happening. Segment 2. Mixed signals from the private data. And those signals, they're mixed. On one side, ADP, which manages payroll for over 26 million U.S. employees, reported that private employers added 42,000 jobs in October, the first uptick since July. That's not a hiring boom, but it's something. ADP's chief economist, Naylor Richardson, called it modest hiring compared with the robust job gains seen earlier this year. But on the flip side, Challenger, Gray & Christmas, the outplacement firm that tracks layoffs, found that businesses announced over 153,000 job cuts in October, the worst October in more than 20 years. Tech firms and warehousing companies led those cuts, echoing a broader slowdown in the digital and logistics sectors that expanded too aggressively during the pandemic boom. Here's the human side of that. People are worried. Glassdoor's Employee Confidence Index shows that workers feel less secure about job opportunities than they did just 3 months ago. And perhaps more tellingly, job seekers who received offers in October were less likely to turn them down, suggesting that workers now believe they have less bargaining power than before. As Glassdoor's chief economist Daniel Zhao said, quote, "October's decline in employee confidence reflects how quickly uncertainty can ripple through the workforce. You can almost feel that uncertainty trickling down from boardrooms to break rooms. In the last 2 years, the U.S. economy has felt like a paradox. Strong job growth, low unemployment, and record high wages, all while people continued to feel anxious about inflation, automation, and economic stability. Now, that anxiety seems to be catching up to reality. Major employers, from Amazon to UPS, have announced layoffs. Many of those affected workers are finding it harder to land new positions quickly. And that's not just a corporate issue, it's a signal that the so-called tight labor market is starting to loosen. Segment 4. Looking back, the last official numbers. The last official BLS data we have is from August, and even that month hinted at a slowdown. Employers added just 22,000 jobs, one of the weakest numbers in recent years. The unemployment rate ticked up to 4.3%. By historical standards, that's still low, but it's the direction that worries economists. Federal Reserve Governor Lisa Cook described it as a softening, not a collapse. But she also flagged a troubling detail. Unemployment for young workers, 20 to 24, was 9.2%, and for Black Americans, 7.5%. That's what she called a two-speed economy. The well-off are still doing well, but lower income and vulnerable groups are not. Segment 5. Demographics and labor supply. Another hidden factor here is demographics. Roughly 10,000 baby boomers retire every day, shrinking the pool of available workers. At the same time, stricter immigration enforcement under the Trump administration has likely reduced the number of foreign-born workers, especially in industries like agriculture, construction, and hospitality. That combination, fewer workers entering the job market and fewer immigrants filling the gap, is like a slow burn supply shock to the labor system. It doesn't create a recession overnight, but it gradually constrains growth and limits flexibility. Segment 6. The unseen costs of the shutdown. Now, let's zoom back out to the real trigger here, the government shutdown. Beyond missing data, shutdowns create ripple effects throughout the economy. When thousands of federal employees are furloughed, it means less consumer spending in local economies, from gas stations to grocery stores. Airports, national parks, even food banks all feel the pinch. And it's not just about inconvenience, it's about trust. Every time the government gridlocks, businesses delay hiring, investors pause capital spending, and ordinary people start tightening their budgets. In short, uncertainty becomes policy. Segment 7. What the Fed and Wall Street are watching. Without the BLS data, the Federal Reserve and Wall Street economists are improvising. They're watching high-frequency indicators like credit card spending, online job postings, and even electricity usage to get real-time signals. So far, those signals still suggest a slowdown, not a crash. Wage growth is cooling, job openings are edging down, but unemployment claims remain stable, meaning there hasn't been a sudden wave of layoffs. That's why many analysts describe the current moment as a plateau rather than a plunge. Segment 8. The bigger picture. What it says about America's economy. Still, there's a deeper narrative here. One about resilience and fatigue. For nearly 4 years, the U.S. labor market has defied gravity. It absorbed a pandemic, inflation, interest rate hikes, and geopolitical shocks, and kept adding jobs. But even the strongest muscles eventually tire. We're seeing that now. Not a collapse, but a cooling. A transition from red hot to lukewarm. And depending on your vantage point, that could be good or bad news. For workers, it means fewer options and weaker bargaining power. For the Fed, it means inflation pressures might finally be easing. For politicians, it's an opportunity or a liability, depending on what story they choose to tell. Segment 9. Voices from the ground. Let's remember that job markets are ultimately about people, not just percentages. When layoffs make headlines, they shape psychology far beyond the numbers. A few thousand cuts at tech firms can make millions of workers elsewhere start wondering if they're next. That's why sentiment is so powerful and why it matters that people feel less confident today than they did a few months ago. Daniel Zhao from Glassdoor put it best, economic uncertainty ripples through the workforce faster than any statistic can capture. In other words, even if the job market is statistically stable, people's fear of losing jobs can become self-fulfilling, slowing spending, hiring, and risk-taking. Segment 10. What happens next? So what happens next? If Congress resolved the shutdown soon, the BLS could resume publishing data by early December, giving the country a clearer view before year-end. If the standoff drags on, though, policymakers will continue to navigate by incomplete maps. And in economics, that's dangerous, because decisions made in the dark can have long-lasting effects. Businesses might hold off on expansion, the Fed might misjudge inflation risks, and voters facing mixed messages may lose faith in the system's ability to manage itself. Closing thoughts. So, is the job market getting worse? Maybe not dramatically, but it's definitely getting murkier. We're in a moment where the real problem isn't a collapsing economy, it's a collapsing signal system. Without reliable data, the line between slowdown and panic becomes dangerously thin. And that's something every policymaker, business, and worker should care about. Because when uncertainty becomes the norm, stability becomes the exception. I'm your host, and this was Pie Uncut, bringing clarity where the headlines don't. If you found this episode insightful, follow and share it with someone who's been asking, so, are jobs really safe right now?